How's everyone doing? While the crypto market has collapsed and stock markets are also in free fall, today we'll be having a closer look at the crypto market and I'll tell you how I plan on making money off of it. So let's take a closer look at the damage first, shall we? Bitcoin has lost 14% in the last week, Ethereum has lost 25%, BNB has lost 25%, Cardano has lost 30%, Solana has lost 35%, Dogecoin has lost 20%, AVAX has lost 30%, Polygon has lost 35%, and so on and so forth. I warned you that a lot of these protocols may fall to zero because they're the transportation layer, and there may not be much value in merely passing data around when these are commodities. Now we see Ethereum, for example. What is it actually backed by? Is it supported by a need? Is Ethereum required to transact on the network, or may users just switch to a quicker and less expensive L1 or L2 network? It's also possible that Ethereum might fall by another 20%, 30%, or even 50%. Because of the high gas fees and the fact that Ethereum is a commodity to me, I don't utilize it at all these days, but I don't see any reason why it couldn't. By the way, don't forget to like and subscribe while you're here. If we look at the charts, it's clear that Bitcoin is trading within this channel and that the prior low of about 30,000 is a strong support level, while the ceiling of about 42,000 is a strong resistance level. As a result, I wouldn't be surprised if Bitcoin bounced and traded sideways for a while. To be clear, it wasn't just crypto that was hit hard by the Fed's announcement that it will raise interest rates in an effort to rein in inflation, which had been running rampant at 7%. However, you know what I think. Yes, I think the Fed is bluffing, and they're just saying this to try to pump up their own fiat dollars and to regain confidence that the US dollar is not going to zero. But if you actually read what they're saying, they're only discussing potential preliminary plans to possibly signal a rate hike. I mean, the US dollar is not even CertiK audited. If you look at historical interest rates, the last time we had a meaningful interest rate above 5 was like 15 years ago. Ever since then, interest rates have been extremely low. We just couldn't raise it. Back in 2019, we were able to get to 2.4, but then we had to drop that down and currently we are at 0.08%. There's no doubt in my mind that volatility and trading volume are going to increase in the near future. In fact, you can see here that trading volume has almost doubled over the past few days as people have just been moving their positions in and out. You can see trading volume was at 50%. It was up like 100, 200% over the past few days on SpookySwap. As you can see, Solana even went down because they host their servers on Amazon Web Services with their Miscal databases, and so they couldn't scale that up. They needed to add a few more database servers or to set their Miscal slave database replication schemes, set up some MongoDB databases so long as they're built on Web 2 technology, but that's how you know trading volume is high, especially during times like this. Now, tactic number 2 is that I kind of caught this, but I did say there would be consolidation within the market in which a lot of these coins may start tumbling. We are saying that a lot of these aren't really backed by anything, you know. Cardano, Solana, and Ethereum all saw significant drops of 25–35%. Although Bitcoin's value has fallen by 15%, it shows that the currency has some sturdiness, and I believe that Bitcoin is at the top of this pyramid scheme, which means that all other coins are just money being cycled in and out of these DeFi protocols as people seek the highest yields and they're just commodities. But if you take a look at these other coins, they're all just money being cycled in and out. I'm keeping an eye on Phantom, which has been making some crazy moves recently, with its total value locked at $13.8 billion. This is the amount of money in the DeFi ecosystem that has already surpassed AVAX, Solana, Polygon, and Binance Smart Chain and is expected to surpass Ethereum as the top competitor in terms of value. Also, there are a few gems hidden here, like Million Token, which you should check out at milliontoken.org. Another social media-driven cryptocurrency with a total fixed supply of 1 million units, which has been audited by CertiK and is deflationary. The fundamentals of Million Token outperform those of the US dollar. Aside from that, I believe that Web3 is a real thing. Take a look at this project, for example, the Million Pool, where you can stake your tokens. Despite the skepticism of Web3, where some wonder what problem Web3 really solves, it solves the problem of trust, which is not a trivial problem, by providing an entirely decentralized and neutral platform, hence enabling an entirely new class of applications. In addition, I don't believe that the fundamentals of cryptocurrency have changed, and I would advise investors not to try to time the markets, because if you try to time the markets, you'll only end up buying at the highest price, never catching the dips. Now, how about the bear situation? Some of these DeFi tokens like Olympus DAO, the On token, and Time Wonderland just dropped in value because inherently I believe they were kind of like Ponzi economics with a slightly different structure, a lot of different tokens, but it still requires new money coming in to maintain any value. There's a lot of hype in this space, perhaps unwarrantedly so, not to mention the people who get into these essentially just join and then they try to spread the word to others as well. Now let's talk about NFT. Since most individuals have no idea what they're buying with an NFT, it seems like the market for them is similarly overinflated. Is the copyright to the work transferred to you? No, you'll get a JPG of the image instead, along with an API link most of the time. Then there are two more points here. First and foremost, there must be an enormous amount of insider trading taking on. Imagine a CoinDesk writer who is about to drop a news piece on the price of Solana. They know it will tank the price of Solana. They open another wallet to take a short position. Who's going to know? An employee of OpenSea was found guilty of insider trading NFT because they knew exactly which NFT would be promoted to the homepage. They just purchased some NFT before the homepage was published, and so normally insider trading is something regulated by the government. But in crypto there is no regulation, so anything goes. So, I'm curious. What do you think would be the best course of action in this kind of situation? Let me know in the comments below. Secondly, the development of crypto is much more difficult than people think, and this is why many decentralized apps are forks of other projects that have been audited by CertiK or other reputable companies. If some college kid went out to write a Solidity contract that would handle millions of dollars worth of deposits and then this gets hacked, this would just be massive losses, so people are afraid to be handling it because of this. OpenSea was recently hacked, and an expensive Bored Ape sold for a mere 17,000 on Ethereum, a fraction of its normal value. Since OpenSea is actually centralized, they can simply reissue the Bored Ape and continue business as usual. Alright, so there you have it. I hope you enjoyed the episode, and if you liked the video, please like and subscribe, and I'll see you in the next one.